You open the app and suddenly you realize it wasn't your bank that processed the payment, it was Apple Pay or Google Wallet or maybe Amazon's new digital wallet. That's when it hits you. You don't even have a bank account anymore. And crazier still, you don't need one because now your money doesn't sit in a bank. It lives inside a tech giant server. Sounds insane, right? Except it's not fiction, and it's not even some distant future. This is the quiet beginning of something real, a silent revolution already underway. Let's call it what it is, the big tech coup. And it's not just shaking up the financial system, it's preparing to bury traditional banking as we know it. So let me ask you this, does it make sense to let banks disappear? Would you really rather trust big tech with your money? Drop your thoughts in the comments. Once upon a time, banks ruled money. Today, the throne is being claimed by a new breed, Apple, Google, Amazon, Meta. But here's the twist. These companies aren't acting like traditional banks. No branches, no paperwork, no waiting in line, no customer service reps, no receipts, just an app and your entire financial life inside it. Everything you do is tracked, stored, and optimized, like a black box on an airplane, but for your spending habits. So how did we get here? Truth is, we barely noticed. One day, Apple launched the Apple Card. Google started offering smart payments. Amazon began lending money to small businesses. At first, we called it convenient. We liked it. It was faster, easier. But then, one day we woke up and realized that money no longer moves through banks. It flows through big tech. And the craziest part, we were okay with it. They moved quietly because they knew. If it's easy, we won't question it. Think about it. If Apple issues your credit card, manages your account, processes your paycheck, isn't Apple your bank now? But here's the catch. They don't even need a banking license because your data is the real collateral. Your spending patterns, your social network, your location, even your mood are in their hands. And with that data, they can create custom interest rates, tailor credit scores, design personal shopping campaigns. Can your average banker do that? Nope. But algorithms can, because while you thought it was just convenient tech, they were building systems you'd fall in love with. Right now, I want to ask you, who do you think controls your money? If you want the real answer, stick around for the rest of this video. And if any of this has shocked you so far, hit that like button, drop a comment, and subscribe to the channel. That support truly matters. And yes, I do read the comments. Your voice might be the most real asset in this digital economy. Let's keep going. How did the banks respond? Some tried to fight back. They built their own apps, launched rewards programs, tried to act more like tech companies. But the truth is, traditional banking just can't keep up. Big tech isn't just managing money, they're engineering behavior. That's what puts them miles ahead of old school finance. Seriously, these companies are designing your habits, shaping your choices. Think about it. The reason you open Instagram, TikTok, or X first thing in the morning, that's not random. It's by design. One last example. Amazon isn't just offering credit to sellers anymore. They know exactly how that credit will be used. Their algorithms analyze your inventory, your customer reviews, your product trends in seconds. What a bank would take months to evaluate, Amazon handles in minutes. Faster, more personalized, and far more addictive. Everything you need, already thought out, already optimized. But here's the most disturbing part. These companies don't just want to help manage your money. They want to own your financial life. This isn't about convenience anymore. It's about control. And in this battle, we, users, are caught right in the middle. Maybe it's too late to reverse it. Maybe they were never just trying to help. And if you want to fight back, we have to talk about this. Share this, and you already know what to do. The war over digital money has already started, but it's not the kind of war with soldiers or battlefields. The weapons aren't bullets. They're your data. Every click, every transaction, every location ping, you're handing over ammo every single day. So, who's fighting? On one side, central banks backed by governments. On the other, the quiet but powerful giants hiding inside our phones. Apple, Google, Amazon, Meta. Sneaky like foxes, these companies are playing a long game. They're not just offering easier payments anymore. They're building entire financial ecosystems. And now, it's time to ask the big question. Do these companies really need traditional banks anymore? Honestly, no. They've outgrown them. Their user bases are bigger than many countries. Their revenue and reserves crush the GDP of some nations. But the real game changer? People trust them more than they trust banks. Just let that sink in. These companies are becoming more than service providers. They're becoming nations without borders. And that's when the real crisis begins, because control over money is slipping away from governments. A central bank's power comes from its ability to issue currency, control interest rates, regulate the money supply, and respond to economic crises. But what happens if Apple launches its own stablecoin? What if Google forces you to shop using only their token? Suddenly, national currencies like the dollar or euro start to feel optional. And people won't say no to something faster, easier, smarter. We've already had a sneak peek at this. Remember Libra? Facebook, now Meta, announced it was creating a global digital currency. The idea was to become a kind of Facebook Federal Reserve. The US government shut it down fast. Congressional hearings, investigations, rebranding, it all ended with the project quietly dying. But the message was loud and clear. We decide who controls the money. And yet, while Meta backed off, the rest kept going, quietly. Apple Pay, Google Pay, Amazon Wallet, no hearings, no drama, just adoption. And the crazy part, we chose the system. Why? Because it's easier, because it's faster, because it knows us better. These platforms know which brands you love, what time you shop, how much you spend, so they offer payment plans tailored exactly to you. And just like that, we stopped needing bank branches. Now, it's all run by a personal algorithm, and that's what's changing the definition of financial freedom. It used to mean, I decide where to put my money. Now it's more like, I hope I understand what this algorithm is deciding for me. You think you're making choices, but are you really? Or is the system just letting you feel that way? And it's not just individual users. Small businesses, startups, even mid-sized companies are ditching banks for big tech. Why? Instant loans, real-time data-driven risk analysis, more flexible terms, better service. And just like that, banks are cornered, squeezed out of their own industry. So now we come to the breaking point. Central banks trying to keep up by entering the same digital arena. The US Federal Reserve working on a digital dollar? Not a coincidence. It's a defensive move. The system can't stop going digital, but it sure doesn't want to lose control. This is their last shot at staying in the game. And if they don't act fast, they'll be benched for good. So here's a tough question for you. If digital money is issued by a company, not a government, is it still even money? Or is it just another digital service? The answer might be darker than you think. Because in that world, interest rates, economic crashes, debt structures, they're no longer set by public institutions. They're designed by corporate algorithms. And if those algorithms are in charge, the economy becomes a code base. Decisions could be made not by what's fair, but by what's profitable. Are you seeing how serious this is now? This isn't just about how we pay for stuff. This is about who owns money itself. Is it still the banks, the state, or the tech giants who know more about your life than you do? Now let's take this story global, because this isn't just an American issue, it's a worldwide war. A war over who gets to control money, and the battlefield, it's right there in your pocket. That tiny phone could one day be the reason you spiral into debt so deep you can't crawl out. But let's stay focused. First stop, China. The government there launched the digital yuan, one of the first major national digital currencies. But it wasn't just about making payments easier. It was about tighter surveillance, cutting reliance on the US dollar, and gaining economic independence. And here's the key difference. China didn't hand this power over to private tech firms. Sure, companies like Tencent and Alibaba are involved, but the government holds the reins. That's how they kept control. And just as a human reminder, let's not forget the oppression faced by the Uyghur population under that same system. Because at the end of the day, we're all human beings and should care about injustice wherever it happens. So, what's Europe doing? The European Central Bank is working on the digital euro. Why? Because if Amazon or Apple take over the space, even European citizens could become financially dependent on American tech giants. And then it's no longer just about money. It's about sovereignty, control, independence. But here's the real kicker. People are choosing big tech systems willingly because they're easier, faster, personalized, instant payments, one-click credit, custom deals. Who would say no to that? But this convenience is slowly turning into invisible dependence. If the system one day says, access denied, what will you do? And this isn't just a theory. Look at what happened during the protests in Canada. Not long ago, people had their bank accounts frozen just for participating. Now imagine that kind of power in the hands of tech companies. If your payment system, your shopping, your communication, your access to services, all run through big tech and they decide to lock you out, that's not just inconvenience, that's economic censorship. And yeah, it's a very real weapon in this new digital age. Maybe, just maybe, This has all been building up to that. A secret weapon no one sees coming until it's too late. And then we have crypto, Bitcoin, Ethereum, all the rest. They're supposed to be the outsiders, the rebels. But what happens if big tech creates its own crypto-style currencies? Suddenly, even the freedom that crypto promised gets commercialized? Or maybe people get so fed up with centralized control, they run toward decentralization for real. Either way, the lines get blurry fast. And the danger? Losing your freedom while thinking you're gaining it? In short, a new era is beginning. The very identity of money, who owns it, how it moves, what it means, is shifting beneath our feet. So now I'll ask you, where do you stand in all this? Drop your thoughts in the comments, because this isn't just another video. It's the start of a massive conversation about our future. Alright, let's put all the pieces together. If big tech actually wins this battle, if tech giants fully replace traditional banking, what happens next? First, the banks go extinct, branches shut down, ATMs disappear, and customer service agents are replaced by chatbots. Need a loan? Want to invest? Just open your Apple or Amazon app. Sounds convenient, right? No traffic, no paperwork, no waiting rooms. But let's be clear, this isn't freedom. This is total digital dependency. You're no longer speaking to a banker who knows you. You're being watched, analyzed, and judged by algorithms. The system constantly scores you, ranks you, decides what you're allowed to do. And if your habits, your behavior, or even your social circle don't fit the safe profile, your credit score drops, your account gets flagged, your digital identity could be temporarily suspended, your entire financial life could depend on a CEO, or worse, an AI model you'll never meet. Creepy, right? Because you won't even know who or what you're really dealing with. Next, governments lose control over the money. Right now, in a crisis, a central bank can lower interest rates to boost the economy. But what if we're all using Apple Coin or Amazon token? Then those levers don't work anymore. Suddenly, economic policy is no longer made in Washington or Brussels, but in Silicon Valley, and that's a huge problem. Imagine a war breaks out, or a global recession hits, and your country can't stabilize its own economy because the money system belongs to a corporation. At that point, monetary power changes hands. It's not elected leaders holding the reins, it's unelected tech CEOs. That's how we end up with economic monopolies. Money no longer belongs to the people or the state, it belongs to the platforms. And that means that they could end up controlling not just markets, but entire nations. And now, maybe the scariest part, financial censorship. If every transaction flows through a private tech company, and that company decides you're not safe or too risky, you're done. No shopping, no travel, no renting. You get locked out, not by a court, but by a cold algorithm that decided you're a red flag. And what then? You can't exactly sue an app, you'd be fighting a digital empire, and even governments can't fully stand up to these companies. So how would you? That's the brutal reality. So here's the big question. Can this be stopped? The answer is yes, but only if we first recognize what's happening. We have to talk about it, confront it, and build alternatives. Open source solutions, transparent systems, new rules that protect people, not just profits. So I'll ask you one last time, who really owns the money now? The banks? The governments, or big tech? The choice is yours. And if you're still watching this, if you made it all the way here, then you're already part of the story. So drop a comment, hit like, and subscribe, because knowledge is power, and that power shouldn't just belong to tech giants. I'll see you in the next video.